I think the XRP network is going to be somewhere at the center of all of that. So
the way I would describe Bitcoin is that it's more like long-term protection from
really starts to get down to what we've seen as historic bottoms. If we go down to say 11,000.
Today, Raoul will explain to us why he believes XRP has a place at the center of the financial structure. Alden tells us why Bitcoin is a great asset to fight inflation, and Benjamin Cowen says an 11K Bitcoin as a very reasonable event. This is the State of Crypto. Subscribe, and as always, hit the like button.
There's this weird narrative from the past about Ripple. The point being is, even if they have to settle a lawsuit and get a slap on the wrist, Ripple plays actually quite an important role. It's a money transmission network, and it does quite a good job of it. And it has deep connections with global governments around the world and has worked really hard on it. So there is a reason the chain is valued as highly as it is, and it's not from speculation, because actually, it got taken off a whole bunch of exchanges because of the lawsuit. It's actually because when I use my net cast law model, the amount of value that gets transacted on the chain is very high. It's being used. So I think if you lift the legal issue, probability is that the value of the chain increases significantly. And as the world moves towards central bank digital currencies, I think the XRP network is going to be somewhere at the center of all of that. So yeah, I don't rule it out. I know it's not flavor of the day for a lot of people. I think it's a big player, it's a real player, and it has its niche.
Lately, Bitcoin doesn't seem like a great hedge against inflation. But in the following clip, Alden explains how Bitcoin actually does offer a great protection against inflation.
Speaking over the past, 3 cycles, if you map Bitcoin price relative to broad money supply growth, it's actually a very strong correlation. Bitcoin does exactly what you'd expect it to. If dollars are being expanded at a higher than normal pace, Bitcoin is usually doing quite well as a scarce asset. What we saw is that during 2020 and 2021, we had the fastest money supply growth in decades, and Bitcoin did amazing along with most other risk assets. And this year to date, we've had complete cessation of money supply growth in the United States. And so it's not surprising that we had a rollover in assets that are basically, marketing themselves as these, scarce and inflation resistant assets. And the challenge is that the actual price increases we're seeing, especially around energy, are happening with a lag from that money supply growth. So, a lot of financial assets felt the effects of that money supply growth before all these price impacts happened. And now these price impacts are happening, and people are saying, well, why didn't Bitcoin protect me from inflation? And the main two ones are one that it already did. It's just that, in the core, what triggered inflation happened a year or two ago, and Bitcoin was responding to that. Another issue, I think, is that the word hedge normally describes paying off in the specific moment that something happens, right? So if you short a stock and then the stock market goes down, it's paying off in that moment. So, when it comes to inflation, normally the things that pay off the best in the moment are ownership stakes in the things that are driving that inflation, which in most cases is energy and energy related types of assets. So those are generally the best types of hedges you're going to get against inflation, because they're going to go up specifically at the time where that inflation's happening. The way I would describe Bitcoin is that it's more like long-term protection from inflation, because you're basically buying into a long-term scarce asset against an asset that is historically growing.
Today's Bitcoin price is at around $21,500, and many analysts believe we could see an 11K Bitcoin. Next, Benjamin Cowen explained how that can be possible.
So far, this bear market, we've gone down to the tune of about like 74, 75% or so. So there is still potentially room for us to have another leg down and still maintain the idea of diminishing losses.
Leg down to which level, Ben?
Yeah, it's a good question. I mean, a lot of people are sort of wondering, like, where is the Bitcoin bottom? And I spend a lot of my time trying to figure that out.
Okay.
And there are some, there's a lot of indicators that I've looked at over the last several months to try to figure out, is the bottom in or is it not in? So let me just show you a few of the charts that I'm looking at. So kind of look at the same thing. Some of the charts that I think are the most interesting are things like the supply and profit and loss. And one of the interesting things about this chart is that historically, Bitcoin does not bottom until after they cross. They crossed yesterday for the first time this cycle. They crossed yesterday. And you can see a very cyclical pattern here for the Bitcoin supply and profit and loss. I mean, the bottom occurs after they cross. And, when it comes up here, that's generally the time where you want to scale out when it's, when we're continuing to push those new all-time highs. So to me, this is an indicator that would suggest that if we did get another leg down, there's a lot of evidence that could be a major bottom, right? I mean, this is one of the indicators that we could look towards. There's another indicator that I've looked at, and this is the running 1-year ROI. This is an indicator that it basically just shows you what essentially the ROI is had you bought Bitcoin 1 year ago. And what you'll notice is that it tends to bottom at about 0.2 or so. Every single bear market, it bottoms about 0.2. And right now, the 1-year ROI on Bitcoin is 0.412. So let's just put out a couple numbers here as we go into the end of the year. So I can make a future projection and say, okay, well, maybe on December 9th of 2022, I think the price of Bitcoin could be $15,000. And if you apply it, it'll show you what the 1-year ROI would look like under that circumstance. And then you can start to play around with, does it look like it makes sense? Could that be the capitulation event? Let's put in, say, 13,000 and see what that looks like. It really starts to get down to what we've seen as historic bottoms. If we go down to, say, 11,000, it would look identical to the prior bear markets, right? It would basically look identical if we saw a final capitulation event, closer to the end of this year.
Personally, I believe Bitcoin will go further down and may hit 14K, but it should not matter because we all know in the next bull run, Bitcoin will go way beyond all-time high. I don't think a 250K Bitcoin in the next bull run is unreasonable. Thank you for watching and subscribe to the channel.